Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we're going to take a close look that some of us would ideally not like to think about at all: taxes, in particular direct taxes. With the budget less than 3 weeks away, ordinarily there would be a great deal of interest in the possible changes in the tax structure that the FM might announce in his budget speech on 1st February. Except that thanks to the forthcoming general elections, this February we are not going to have a regular budget, but an interim budget, and the convention has been to abstain from announcing tax changes in an interim budget. However, since that does not prevent government from announcing its intentions on the direct tax front, we are going to spend the next 25 minutes or so discussing what ails our present tax system and, more importantly, outlining the contours of an ideal tax system that we hope the next government will take on board. And to help me do that, I have with me two tax experts who combine the best of both theory and practice when it comes to taxes. Arvind Modi, tax practitioner with years of experience with the Revenue Service, who has been involved in numerous tax efforts, reform efforts to date, and Ratin Roy, Director, National Institute of Public Finance and Policy, the Delhi-based fiscal think tank. Welcome to the show, Ratin, Arvind. Let me start by asking each of you in turn, what is your understanding of the interim budget? Can governments really make any changes in the tax structure, or should they kind of stick to what has been the practice in the past and not announce any changes at all? Let me start with you, Ratin.
Well, the practice has been not to make other than adjustable changes to the structure. I think that's a good idea. Since the majority of the budget, the full budget will be in July, there's no point taking the revenue side of it and making an announcement that is dramatic. But that does not mean the government cannot. But then one would need to know what that was. And other than the direct tax code, which is in limbo as far as I know, I can't really see what dramatic announcement the government could make on taxation in this budget without that being a significant policy shift.
Arvind, would you agree with that assessment? Is there any legal bar really on government announcing any tax measures, or is it just a matter of convention?
Well, there's no legal bar as such. Once you present a budget, you can make any proposal you want to. However, as a matter of convention, at least last 30 years that I remember of working in the tax policy legislation wing, there's been not a single instance of tax proposal changes in the interim budget.
Ratin, given that this government has not really been able to deliver even on one of its early promises, which was to reduce the corporate income tax to 25%, do you see the possibility of any announcement carrying forward that intent in the interim budget? After all, government could always claim that it's not a really new announcement. Ratin?
Well, Mythili, the intention to reduce the corporate income tax was what the finance minister stated without any necessary time frame. And the reason for that was, the idea was that the corporate income tax rate, the headline rate, would be reduced by essentially reducing exemptions simultaneously. Exemptions have been reduced, and therefore one would be able to see the corporate income tax rate, the headline rate, coming down in future. I do not think that that is something that should be announced in the interim budget. That is something that should be announced in budgets going forward. I think there is bipartisan consensus on this, because what you have is that it's only foreign companies and a few guys who can't afford chartered accountants who actually pay our high corporate tax rate. Most of the others are covered by some exemption or the other. So the idea was reduce exemptions, reduce the rate in a revenue neutral or even better revenue enhancing way, and that there is bipartisan consensus on. So I think that process is going on, but one must appreciate that a timetable for that is difficult, because the political stakes and the stakeholder interests are powerful interests. So as you go down exemption after exemption, you're going to come up against more and more opposition from some very powerful people, and that will have to be overcome politically without being disruptive. Hence, this process will take time, and that time would be going forward for the next 3 or 4 years.
Okay. Arvind, one of the criticisms really of the tax structure in India is that the tax system has been used to serve a multitude of objectives, of which revenue is only one. So taxes have been used to encourage R&D, spur investment through higher depreciation allowance, backward area incentives, etc. Does this make the tax system less efficient? And should tax systems, do you believe they should focus only on revenue and leave other objectives to other policy instruments? Arvind?
Well, traditionally, I mean, over the last 20 years since the Dr. Kelkar's report, there has been, we've initiated this debate of whether we should have multitude of objectives in the tax system. and every committee after that has repeatedly emphasized that exemptions must be done away with, and that's the international trend also. Following that, the finance minister in 2015 budget has announced a comprehensive withdrawal of grandfathering of all tax exemptions. So I think that debate should be treated as closed in some sense. Now, if you really want to reopen, then the question will be whether what kind of incentives should we provide, but fortunately, I think that is one initiative which this government has performed on this front, this government has performed outstanding, is doing away with all incentives, completely all business incentives have been taken away, and we should stick to that.
Okay, so some praise coming in for the government on that, but rather the fact is that successive governments have tried to draft a new tax law, but without much success. Why? Why has reforming the existing tax law and replacing it with a simpler law proved so difficult? And both you and Arvind have talked about exemptions. So do you see government being able to scrap them not only in the corporate side, but also as far as the personal income tax is concerned? And especially if you look at the budgets, there's a huge amount of data on the revenue foregone because of exemptions. But can governments really, bell the cat over there?
Well, all I can say is the government should. Whether it can is actually a difficult task. I have a lot of sympathy for government in this because it involves dealing with a number of stakeholders who are very powerful. It's not something the government can do unilaterally without imposing political costs on itself. So of necessity, these things are negotiated. And also, I find that in this country, Mythili, genuinely many economists don't seem to understand that if you want to be nice to people, the best way to do it is to collect the money and then give it to the people you want to be nice to. Not try and be nice to people by collecting less money from some and more money from another. This perfectly simple premise is, I think, antithetical to the idea of relative equity. People get very angry all over the world when they feel that they're paying, the same taxes as someone who's very rich. The point is not that. The point is that the same tax rates. The point is that, if someone is very rich, then if they're taxed at rates at which the taxation can be optimized, then that actually increases the tax base, increases tax collections, and then you can use that money to spend on the poor. But explaining the simple, or whoever you want to spend on. But explaining this simple premise even to the popular public is difficult. So the government has a problem. The public doesn't understand the need to moderate tax rates while reducing exemptions. The stakeholders who already get exemptions obviously don't want to give them up, and new entrants into the system then begin to learn very quickly how to play the system to maximize exemptions, use the the rather fraught tax administration and judicial process to their own advantage. And of course, the bureaucrats, and I know Arvind will agree with me on this, the tax bureaucrats like the idea that they have lots of discretion. They are not fundamentally going to go with rules and simplification unless there is political will that forces them to. So what you will get is huge resistance from the tax collectors to any simplification of the tax rules, because then what will you do with all these chief commissioners and commissioners who are adjudicating on things? So it's a powerful political task, and it is very rare in the history of the world that this cat has been belled until an economy is, way into its sort of development transformation. So I don't think we are doing too badly on this score, but of course we need to do far more collectively, and we all need to do our bit in putting this across, that the government face, and not just blaming government. It's a difficult job out there. Stakeholders have to be convinced, and we need to, all sort of band together to make this happen, irrespective of what the government of the day is.
Very true, and I'm sure Arvind will agree with you. But Arvind, in fact, you headed a committee to look at the direct tax code rather than take a relook at direct taxes. But your report has not seen the light of day, and government has appointed a new committee. What happened? Because actually an ideal tax system should have few rates, few slabs, and few or no exemptions. In fact, some would argue that there is a case even for a flat rate beyond a certain threshold. But is that feasible at all? What is your sense? What happened to your committee report?
It's a little embarrassing for me to respond to that. But let me tell you, I'm not particularly known for not completing a job assigned to me.
Okay.
So I think I'll leave it with that.
But Arvind, I was hoping that now that you've retired from government, you'd be a little bit more frank and tell us, what really, in fact, on the issue of the flat rate of tax, was it discussed at all? Did the government find the report not quite kosher? What really, to your mind, very broadly, that you suggested that made the government think, well, no, this is not the time to make it public?
Well, there were several options that we did consider at the time of designing the personal income tax structure. Broadly, there were two models that were considered. One was a model where you remove all the exemptions and increase the threshold significantly higher, so that the system is totally cleaned up. And following that, you also streamline the tax rates. I mean, so that was one model. The alternative model was you streamline the tax rates partially and retain some of these existing exemptions with some minor modifications here and there. So these were the two broad alternatives. I would not like to specify the numbers as such, because there's already a committee which is looking into it. So it won't be fair.
Okay, so I won't press you on that, Arvind. I know it's a little awkward for you to come, express a little bit more on that. But Ratan, the fact is that one of the big no-nos in India so far has been a tax on agricultural income. Even though it is large farmers who presently benefit from the exemption given to agricultural income, it's a very emotive subject. The moment you talk of agriculture taxation, everybody goes up in arms. So do you see any government having the courage to tax agricultural income, Ratan?
Well, I'd like to answer that question, if I mean, in a slightly different way.
Okay.
If the proposition is that the agricultural income tax would significantly increase our income tax GDP ratio, I think that is not going to be the case, for a variety of reasons. It is very difficult to estimate net taxable agricultural income in the first place. The pattern of large farming that we have that is not as organized as one might think. There are a variety of subsidies and other items that farmers take advantage of, which would perhaps need to be looked at in terms of which of these would be treated as deductibles, etc. So from that perspective, I don't think that the costs of trying to put taxes on people to whom we do not even supply, basic amenities like running water, right, or sanitation, should be a priority. However, if the proposition is an important proposition in public finance, equal treatment of those who earn the same income, then we should make that point and move ahead with that case being in mind. Unfortunately, those who argue for an agricultural income tax argue for that as something that will increase our tax GDP ratio. So I think that premise has to shift, and then we can have a conversation on the equity principle, which I think would be more productive. Because then we could, then the farmers could ask us, so what are you giving us in terms of services? We could say, well, we are giving you services, and then they could say, well, but you're not giving me the same level of public services that somebody who does not have to run a farm gets, and so on and so forth. So we could, and there are other alternatives. Agriculture could say, why don't you tax by profits? Why do you want to tax by incomes? But that's a different conversation. For that, we have to build consensus that we're doing this not to raise the tax GDP ratio, but to invoke the principle of equity. And if we do that, I think we'll make some progress if one does want to have an agricultural income tax. I'm quite comfortable with it not being there for the reasons I've just stated.
Okay, that's very true, Ratan, because the fact is that revenue mobilization and equity are just two sides of the same coin when it comes to taxation. But Arvind, last time I let you off, I didn't pin you down on your recommendations of your committee. But assuming that the recommendations of the new committee will not have any relevance for the forthcoming interim budget, one doesn't even know whether they'll submit it on time, does it mean that the fate of the new committee's report is also sealed? Because even if we do get a BJP-led government, one doesn't know, its composition is likely to be different. So will this report, the new report, will it be confined to some dusty shelf, useful only for researchers in Ratan's NIPFP, Arvind?
No, not really so. See, when a report like this is prepared and submitted to the government, we really do not look at it whether there's a existing government or a new government. What happens is that report is generally released in public for debate. Okay. And based on the debate, whichever is the government of the day takes a call whether to take it forward or not. So this report also will meet the same fate, in the sense that after it is submitted in month of March, if the government of the day decides to release it for public debate, then the process will start. And that would probably be 6 to 8 months, and we should see some result in the budget of 2020 rather than in 19.
Except that my question remains, why has it been so difficult, despite the numerous committee reports, that we really haven't seen any significant change in direct tax laws, Arvind?
You see, direct tax laws, comprehensive reform always takes a lot of time. Piecemeal incremental reform, yes, last 20 years we have been doing it, and the fact that all the exemptions, business exemptions have been removed, that shows that we have made significant progress.
Okay, so it's just a question of which way one looks at it, but I'm afraid it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with two tax experts, Arvind Modi and Ratin Roy, on the direct tax code, direct taxes, what can we expect from the interim budget, if anything at all. Ratin, before the break, I was asking Arvind about the direct tax code and why is it that we really haven't seen comprehensive reform of the income tax law, despite the various committees. I know you wanted to add something. So what did you want to say, Ratin?
I wanted to say that direct tax code is not rocket science. What we want is a simplified tax code. We have been in this process since 1996-97. I don't know how many direct tax code reforms Arvind has written. This is not certainly the first one that he's proposed or written. He wrote something under UPA, if I recall. So we have to ask the Sherlockian question: who does not want a direct tax code? It's not the politicians. So my surmise is this, that as long as we have a system where people continue to think that they can gain rents from the activities that they do instead of just earning incomes, it is not in their interests to go for a simplified tax code. What they want is rents which involve discretion, and therefore they want taxes on those rents also to be highly discretionary. So I think there is a consensus intellectually between those who pay taxes and those who are charged with collecting them, which the politicians don't fully understand, that a simplified direct tax code would be a bad idea in terms of the immediate interests. Therefore, there has to be, I think, a more public campaign, which people are unwilling to do, especially the Income Tax Department, which is remarkably insulated from, talking directly to the public, where data has to be put out there, arguing why a direct tax code that is simple and transparent is necessary. Only that, I think, will get rid of this unholy alliance of vested interests, who I think constantly seek to subvert attempts to have a simpler direct tax structure.
Very true, very true. In fact, there's much that civil society has to do to reform things in this country. But Ratin, you raised a question of equity, and the fact is that income inequality, the entire question, has gained a great deal of prominence after Piketty's book was translated into English. And the basic premise of that book is that inequality is increased because returns to capital have grown much faster compared to returns to labor. Add to the fact that capital gains are taxed at a lower rate, and the tax rate is not uniform for different asset classes. For example, the capital gains on shares held for more than 1 year are defined as long term, unlike in the case of, say, capital gains from the sale of a house. So inequality is bound to increase. So do you think we could ever move to a system where, regardless of the source of income, all income above a certain threshold is taxed? Ratin?
Well, we ought to, but let me add, Piketty's argument is being misunderstood. I've written about this. In India, actually, the rate of return on capital, if you measure that, is less than the growth rate. His point was that when the economy is in steady state, the rate on return on capital is greater than the growth rate. That's not true in India. If you look at the return on bank deposits, right, it is actually less than the return on the growth rate. So the inequality is happening in spite of that. Therefore, when you, and even if you then said that what you want to do is tax assets, then there are only two taxes you have, a wealth tax and an inheritance tax. Both of these tax bases are notoriously difficult to tax, and for that very good reason, countries have more or less given up on it. So what you need to do, I think, is tax everybody at rates that are, as you were rightly saying earlier, fair and uniform. And then if you want to do something about inequality, use the proceeds of those taxation, to address inequality. Taxing rich people and poor people at different rates has very limited purchase in terms of inequality. And the more you go into stuff that rich people have and poor people don't, like assets, estate taxes, inheritance taxes, global experience shows us that the return on these is very, very low, and the administration costs are very, very high. So people have to understand this. Equity is about public spending and about transfers. Revenue maximization, taking from everybody, is about taxation. So yeah.
Okay, so one aspect of it is equity, and the other aspect of it is revenue maximization, and so don't really look at one through the prism of the other, is your point, Ratin, if I understand you right. But Arvind, if you look at the data on the number of tax assessees, it makes for rather dismal reading, because in his last budget speech, the FM, using data for the assessment year 15-16, pointed out to how, of the 3.7 crore individuals who filed their tax returns for that year, only 24 lakh taxpayers had declared income over 10 lakhs, even though close at 10 times that amount really traveled abroad. But and similarly, you know, down the chain, if you go, the same thing happened. Why is it? Is it something that is peculiar only to Indians? Why are Indians so loath to pay tax, Arvind?
Well, I wish I could resolve this dilemma or this mystery rather. Why do they pay? Why is the compliance so low? I have not been able to resolve from an enforcement point of view. However, we have seen that over the last, I will take a very long trend of last 25-30 years, that as we have progressively reduced the rates, we have seen improvement in compliance. And with the reduction in rates, you must use the stick very effectively. Okay. Now, if you only use the stick, we've also had experience that if you only use the stick, then the system doesn't kind of yield the kind of revenues that you are looking for. So you have to use both the stick and carrot simultaneously. Unfortunately, either we end up using only the carrot, showing only the carrot, or using only the stick. But both must go hand in hand. Only then probably we will be able to improve compliance.
Rathan, Arvind talked about carrot and stick, but the fact is that governments have tried various things, and despite concerted efforts to raise more tax revenue from direct rather than indirect taxes, latest data show that actually the share of direct taxes in total tax collection has not really increased. In fact, after moving up, it has again dipped to less than 50% of the total tax collection. Why is that so, and what can we do to reverse this trend? Could GST, with the clear audit trail that everybody talks about, could it change it and make direct taxes again more than 50% of total tax collection, because that's the way it should be?
I think that will happen very soon, because I think good things are happening in terms of getting taxpayers into the net. One good externality of GST for the direct tax side is that now we have far more data to improve compliance. We do need to spend a little more on collecting direct taxes. I don't mean more bureaucrats, God no. I think we have a fairly reasonably large income tax department. What we need is to empower them with both technology and data, and to actually enable them to understand that they need to take advantage of a policy ecosystem that exists that would enable tax collection to improve, both by improvements in compliance and by improvements in administration. That, I think, will bring the share up to above 50%. But let me be very clear that, you know, what happens, Mythili, with taxation is that as the economy grows, it's a step function. The first time you see a jump in direct taxes is when you cross about, you know, and today's prices, in today's numbers, $1,000 to $1,200 per capita. The next jump comes when you go above $4,000 per capita, then $7,000 per capita, and so on. So ultimately, when we have a significantly larger economy than now, direct taxes will become more important than indirect taxes. It will almost automatically follow. With one caveat: if we go back to a world where we have trade wars, then the share of indirect taxes may go up, simply because the share of customs revenues, taxes on international trade, which have been secularly declining across my lifetime, will begin to rise again. But that caveat apart, the two takeaways are: you can increase the direct tax take by improving compliance and getting more taxpayers into the net. Good things are happening, but now we need to spread out and make this happen with the policy ecosystem as a whole. Ultimately, direct taxes are a step function of growth, and therefore we have to wait till we are reasonably richer, not just by rupee, but many more rupees, before you'll see another jump in the direct tax GDP ratio. And you might, even despite that, you might actually see the ratio between direct and indirect taxes not jumping as much as it would have otherwise, because of trade wars and the possibility, the very real possibility, that taxes on international trade will begin to rise again.
Arvind, we're running out of time. So if I were to quickly ask you, if I were to ask you, say, for a wish list of just the three major things that you would like to see as part of the direct tax reform, what would they be? Arvind?
Well, the first one is rationalizing the structure itself, because there are several distortions. Those need to be eliminated. The second is, of course, we need to sharpen our skills on data mining and data analytics. I think there we have a long way to go. And unless we sharpen that, then all this noise about volumes of data being collected and not being effectively used, this is going to become a serious problem in the years to come. Because beyond this, no government can provide anything. I mean, the government of the day cannot provide anything more to the tax administration than giving making available real-time data. But it's the tax administration which should be able to effectively use that data.
Okay. Rathan, would you like to add to that? What would your three wishes be if you really were to do an effective reform of the direct tax system?
talk to the public, talk to the taxpayer, not at the taxpayer, please.
Okay, you put it very well, but I'm afraid we've come to the end of our program, so I'll have to end this very interesting discussion now. I mean, let me just conclude by saying that in 1927, Justice Oliver Wendell Holmes, the American jurist who served in the US Supreme Court, famously said, "I like to pay my taxes. With them, I buy civilization." In the Indian context, I'm not sure how many of us would agree, but the fact is that without tax revenues, government really cannot do very much to ensure even a semblance of a civilized society. So all the more reason to have a direct tax law that, as Arvind and Ratin said, garners revenue for the government without burdening the public too much. But is that too much to ask for? Not if government were to really heed the suggestions of Arvind and Ratin. But on that note, I'm afraid I have to end this program now as we've run out of time completely. Thank you so much, Arvind and Ratin, for joining me in this fascinating discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.